today I've been trying to do, the TGR videos.
Mm-hmm.
And, well, I came up to break structure ages ago. And the annoying thing is, when I ask people, like, in the group chat or from another one, they all say different things. So, like...
Yeah,
So, like,
I can't tell you, like, their definition or, like, whatever. I could tell you what my experience is and what I know it to be.
Better. I'll just stick with whatever you say, to be honest.
Okay, that's fine. Let's see here. Okay.
Like earlier, I thought I found one that I was confident I was. I asked one person, they said, yeah, definitely. And then another said, definitely not.
Mm-hmm.
So...
Yeah, no, don't worry about that too much. If you ask too many people too many questions, I know you're anxious to learn, but if you stick on one subject and ask, like if you're stuck on something, write down the question and try to move on to the next thing so I could help answer you. If you just focus on like what I'm telling you, it's going to be a lot easier than if you constantly are doing what other people are telling you to do, because everyone has a different opinion, because there's many different strategies in trading. So they all work. It's just they have their own confluences. So I can tell you what works for me. So can you see my screen?
Yeah, I can now.
Okay, so this is the daily. This is how you find high time frame break of structure. This works for most time frames, but time frame alignment's really important. So I'll show you this is what a daily break of structure looks like. So as you can see right here, we have higher highs, higher lows.
Yep.
And every now and then, it might come down a little bit and manipulate, but usually you're going to see some pretty strong wicks. This is where it gets confusing, because a lot of people can't really tell the difference between something like this and something like this. This right here, in my mind for now, was at least an initial break of structure, because you have to look at the highs and the lows. So right here, this is consolidation. This is higher highs and higher lows. Here, 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 and here. Okay? So, let me delete all this shit, actually. So look. We have higher highs. Not that one. Higher highs. Higher lows. Here, here. And then, we have this low taken out. We have this low taken out. We have this low taken out. So that's 3 lows right there. Then we have this major low taken out. This is more of an external range, right? At least for daily.
Yeah.
So like when I say internal and external, kind of like what we went over yesterday, I'm referring to the time frame at hand. So I'm not talking about for like a day trade necessarily, but for like daily bias, internal and external, that's what I'm talking about. So the range would probably be something like something really, really big that you wouldn't trade. So probably something like somewhere right here, and somewhere right here. So this would be kind of like the range, right? Because these are major lows. This is major liquidity. Price failed to take this low right here. That's that. If you're bearish, you want to see this getting taken, and then maybe a daily or two, like 1 or 2 days on the daily time frame, that is at least. You want to see a closure below strong. You want to see something like this. Then it's pretty safe to expect that price isn't respecting. Because remember, you want to trade based off how price is reacting, right? So once price takes this, if it does, it looks like it's kind of trading up. But price always comes up before it goes back down in a bearish structure. Because if you pay the most attention here, we have a lower high. Okay, that's indicative.
Yep.
That's indicative a break of structure could happen. So that's the first thing you want to look at. Okay, so I'll try to keep it simple for you here. So higher highs, and then all of a sudden, this is the high that we failed to take out. That is indicative. Now it happens a lot. So like this right here, we failed to take this out, but we continue moving up and push past it. Okay, so that's where it can get confusing. But for something a little more obvious like this, because there's different circumstances, right? You have this major high right here. So you got to think how valuable this high is for bulls. Bulls want to see this high get taken out more than anything. Obviously, and these are swing traders because this is the daily, and I'm going to scale down the different time frames in a minute, but my point is this is a very valuable high. This is the external range high. External is very, very, very valuable. And price, if it takes something like that out, it will react even more harshly than it would for an internal range. This would be more of like an internal high on the daily, right? So you notice we failed to take this. We tanked down. We took out all these lows here. we took out this low, we took out this low, and then we took out this low. So before it was a break of structure on the daily, we came down, took all these highs. These are all internal range highs. This is an internal range high. This is more probably like an external, this and this. Okay? So price came and took all of these out. What do you notice afterwards that happened? You notice that we wick below, right?
Yeah.
And then we start respecting it. So now the key to pay attention to is if price fails to take this high or only wicks, remember turtle soup like I taught you. You remember what turtle soup is? It's where it just wicks, right? It doesn't close above that high. Yeah, like if the candle closed above the high like this, that would be, you get what I'm saying? But if it just went like this and then the body ended up closing right here, under this, that would be a turtle soup. Or, in my humble opinion, maybe just a weak closure like this. But usually a long wick is a great indication of a turtle soup. But I don't want to get too far just into turtle soups. The main point here, number one, we failed to take another high. Okay? So you should expect one of two things to happen here. Either it manipulates down to take some internal range to trade back up into this external range to take out the external range, right? And to make more highs if you're bullish, or it to take or for it to trade down to take out more lows in order to have a reversal. So in this case, a reversal happened. So your first tell is that it failed to take this high. So this is kind of, this whole area right here is kind of an area of confusion. What you're looking at is these lows right here, like I marked out, these three right here. You want to see all three of these get taken out because these are all internal range lows. Price initially took this one out, and it took all of these out before it even thought about slowing down. Price then slowed a little bit. It traded back up into what? This order block right here. It tapped it, right? Or got close to it. Respected it, and continued trading lower. This whole leg right here is manipulation. This happens every single time. You see higher highs, higher lows. It always trades down. The same thing happens the other way around. So, number one, failed to take. Number two, we took out a bunch of internal range lows. Okay. This is the daily, so, like, I wouldn't recommend doing this exact thing on the 1 minute. I can kind of show you what that would look like on the 1 minute. But for, like, for the daily, these are internal range lows, but you got to understand, daily lows are very, very important. Same with, like, any high time frame lows, like 1 hour, 4 hour, daily, or higher lows. Like, 1 hour plus lows are really, really important. So even if it's only internal, you need to see one of two things happen once it takes these out. You want to either see respect and then continuing to trade higher, or right here, if you're bearish, you want to see, usually you're going to expect some type of respect. This is where people are entering, by the way. You're going to see some type of respect and then come back down and come below this. Now, this right here is a form of manipulation to make you think it's a turtle soup because it just wicked below. It touched it, it traded up a little bit, but if we zoom in more, it turtle souped, yes, but remember, you don't just like enter off shit like this. It failed to take this high on this internal range. Yet again, another indicative form of, okay, cool, we're still looking like we're bearish, right? Because we're not taking it. And if we did, maybe wick above it, turtle soup, but then tank. But this we turtle souped and then we didn't skyrocket. So it is a turtle soup, but it's not a crazy high probability turtle soup because it wicked it, manipulated a bunch of people. A lot of people probably thought it was bullish because they were expecting this liquidity to get taken out, but we didn't come up and close above this high on this range. Instead, on the high time frame, right?
Yep.
If we zoom out, we actually ended up taking out this low. And this is more of like an external range low. And this low. These are more external range lows, right? Now what did we do? We turtle souped them, actually. This one we closed below, but this one we fucking turtle souped 3 times. It wicked it 3 times on that one, right? If I wanted to see a bullish break of structure, okay? Because of what just happened, because we failed, we took these lows, but we turtle souped and we had a strong reaction, meaning it could be a high probability turtle soup. If I don't want it to be a manipulation and I'm thinking it's continuation and we're just going to keep trading up, I want to see this internal high get taken out, and then I want to see it come back and trade down and form a higher low. I don't want it to come below any of these lows right here. So I want it to look like something like this. Maybe coming up, taking this high right here. Okay?
Yeah.
Coming back down, maybe just something like right here. It could even get really close like right here, or even maybe barely wick it. But it's not really, it's kind of respecting and rejecting off of that, then coming up and taking this. Because remember, internal to external internal to external, right? So if I wanted this, if this looked like a daily break of structure, right? It would come up, take this internal, like I was telling you, come back down,
Yeah.
either fail to close below this, or maybe turtle soup again, because sometimes it turtle soup several times. But the main thing here is that it's not coming down like to here and closing below here. You get what I'm saying?
Yeah.
So you'd want it to see you'd want to see it come up and then take this high. Once it closes above this high, it's pretty safe to say we have a bullish break of structure on the daily. But let me put it to something a little bit more practical, like the hourly, because the hourly I love. So what we'll do is kind of like I told you. We'll mark the most significant highs and lows out that are close. This one and this one. This is a high value high right here, because as I told you yesterday, this is a daily SMT, because ES took this, NQ failed to take this. NQ didn't close up or even wick above this high, right? But it's very, very small. But it's just something to keep in mind. So here we go. So now this is something more practical that you might use in day trading. So you remember the fair value gaps?
Yeah, I think so.
So look, we have a bullish break of structure right here. Okay, we come up, we close above this. It's pretty small. We started trading back down, right? So this was manipulation, right? But now this is external range liquidity. It's high value because bulls want to take this out, and then they also really want to take this out because they also noticed that price failed to come up and take this out right here. This was the external initially. Now this is the on the hourly it's the internal, but it's the external. As this right here is the external. This is what you'd be aiming for as far as hourly liquidity goes. Now what's important here as far as break of structure goes, we took a bunch of highs and then we immediately come down to fill this fair value gap. But what's important here is that we formed a low, we formed a higher low, we formed a higher low, we had a little turtle soup, but basically still a higher low, right? It's a little turtle soup, but it's higher low right here, a little turtle soup, and then strong reaction. You see how it comes back up right after that? That's called slippage. That's what turtle soups are. Turtle soups are slippage. And then also higher high, higher high, higher high. You get what I'm saying? So don't try to be like, I think the problem with a lot of new traders is they try to predict it like super soon when the market actually gives you insane value. If you would just keep it simple. I know, like, listening to me, it probably sounds obvious right now, but like when you log onto the charts on Monday, you might think to yourself, like, it's not, like, it's very noisy and it's very confusing, because I get it. Sometimes I come into the market, it's very confusing. But just look at the high time frame and what it's telling you. You can see here, like I said, you have higher highs. A bullish trend is defined by higher highs and higher lows. A bearish trend is right the opposite, like this.
Yeah.
I mean, that very simple. You know that, right?
Yeah, I know.
So what would this be then?
Is that let me zoom in.
This whole
Is that
move
bullish?
right here. Right.
Is that bullish?
Yeah, that's bullish. Why?
Well, higher highs and higher lows.
Exactly.
It took me a while then, cause my chart's green and red.
The higher highs though, you gotta keep this in mind. The higher highs mean nothing if it's not creating higher lows, because then it's just consolidation. You get what I'm saying? Or it's manipulation.
Yeah.
But you have not one, not two, but three higher highs, and then three higher lows, and then one manipulation leg before it skyrocketed, right? Because remember, this is the hourly chart, so these candles are very expensive. This is a 600. This is a 170 point candle right here. So, break of structure. The break of structure would be whenever, probably not this, because I actually wouldn't even consider this a higher high. I would just consider this a rebalance, if I'm being honest with you, because it didn't really it took out this high, but this isn't really like that important to me. It just kind of wicked it. I'd say more so we created a major low by dipping down into this fair value gap because you knew at this time, right here, before we had any of this bullshit, I knew that the draw on liquidity was the fair value gap. The draw on liquidity, identifying draw on liquidity is important. So you need to know what direction price is likely to go due to what it's showing you. If we have a super strong bullish move, we're almost always going to have a retracement. Same with bearish moves. So you can know that. Don't predict it, but you can know it. That's the draw on liquidity, and that's your bias. We formed a major low right here. We then failed to take this low. We traded up a little bit. We rebalanced, really, in this leg. Failed to take this low right here. And then formed this low. Came up. And we had a strong wick above all of these highs right here. In this. So that's a higher high. It's not like a crazy big swing high. It's not like break. I mean, it could be break of structure, but I don't know. This right here, you want to look for displacement candles. So very big candles. Like, very big candles. So something like I'll give you an example. A lot of people hate XRP, but XRP is a crypto. I don't know if you've ever heard of it.
Yeah, I've heard of it. Yeah.
Yeah, I don't have like a shit ton of money in it, but look, like something like this, right? This is a bullish break of structure. It's very obvious, but I'm keeping it obvious for a reason. So look, you have all these little minor consolidation happening because it was waiting on the SEC lawsuit and everything. This is the major liquidity that that price wants to take out. If price takes this out, it's very strong. So look, you notice that price came up and we wicked it. We turtle souped it, but we didn't trade down immediately, like very strongly. I mean, we did like for 3 or 4 days, but it didn't really move down crazy. Holy shit, my headset's about to die. We came up, we turtle souped this, but it wasn't a very high probability turtle soup because you need to wait for the reaction. We rejected, so it was a little form of like some people like to call it resistance. It kind of rejected off here, but it didn't reject like crazy strong like I would want it to, right? So we already had a bullish trend here in the form of internal range break of structure because we had strong closure above all of these highs. Even this one right here, this would be the internal range high. Strong closure above all of these, this, and even these. But every time it takes a high or a low, I want you to notice something. These internal range highs that are major and this one that it took, it retraced back down a little bit, or it slowed. At least it slowed. At least. The way I like to think of it is like when price takes a major high, whether it's internal or external, what it does is it either it's like goal setting. It's like you, right? You, Charlie, set a goal. You get a goal done. You need a minute to think for what your next target's going to be, right? That's kind of what price does. It comes up, it does what it needs to do, or comes down, and then it's kind of thinking for a minute. Okay? But sometimes, if it's turtle soup, it's manipulation, then price already has the goal set that it's going to manipulate you, so it takes it and dips. It gets the fuck out of there because it doesn't want you catching on. It's like trying to trick you. But instead, it thought for a minute. If a bearish break of structure were to happen here, it would look something like this, Charlie. We'd come down with these lows right here, and I don't mean gradually over a lot of time. I mean like in the form of like strong displacement, like strong candles like this, but bearish, coming down, closing strongly below these lows. So I'm thinking somewhere probably like right here, closure, and then holding below this low, or at least, and then failing to take this high right here. So maybe right here. The lower the high, the better. So like if it gets super close to it, I feel like it's less probability, but I don't know. Sometimes you never know. But this right here, if it closed like way down here, like the candle closure, something like this, that'd be a bearish break of structure, and we form a lower low. So it's just trend change. Break of structure is just trend change. That's all it is, Charlie. So like I said, I hate to use crypto as an example because I don't really like crypto that much anymore. But something like this. This is a break of market structure on a very high time frame, but this is a very, I highly doubt, unless something crazy happens with this company, that price comes down and takes these lows. All of this resting liquidity down here. These are very, very, very valuable lows, and if price takes those, a lot of people are going to make a lot of money, but most people are going to lose a lot of money. Most people, because most people don't day trade, and most people don't realize you can make money going up or down. Okay? So it doesn't really matter what price does in here, because now price is going to hold above certain levels. Look at this wick. It came down and took these internal range lows, but then came right back up because price wants to stay up here. It doesn't want to go back down here because it's worth more. So, same with this. Price came up and took a shit ton of liquidity. All-time highs, actually, right?
Yep.
But you look at something like the hourly, and as long as it's just narrative, I'm basically just explaining narrative to you, because break of structure, the definition of structure in my book is narrative. That's what structure is.
Yep.
Like, what is the market structured like right now? Is it structured like it's consolidating, like something like this? Does it structured like it's manipulating, something like this? Is it structured like it's in a buy program or a sell program? I ask myself, are we in an obvious buy or an obvious sell program? Keep it simple. Okay? We have a saying in the military we used. It's called keep it simple, stupid. KISS. Keep it simple, stupid.
Yeah.
That's it right there. So,
yeah.
I mean, higher low, higher high, higher low, manipulation, higher high. You could expect either price to come manipulate if you're bullish and take out these highs, or at least these highs, or you can expect it to just create a higher low right here instead of coming down manipulating. That's what you can expect, unless we have another reversal. But you just react how price tells you. If you had that's what a bullish break of structure would look like right here, because we already had a bullish break of structure, but basically continuation, because structure already broke here and here. And these higher lows. Structure already broke. You get what I'm saying?
Yeah.
So it's gonna be either continuation or reversal. Reversal is break of structure. Continuation is just gonna keep you doing what it does. And there's manipulation. Manipulation usually ties in with continuation, but sometimes reversals. So don't worry about manipulation too much. Manipulation is really, really advanced. A lot of people don't understand the concept of manipulation. So we'll get into that at a separate time. But higher highs, higher lows, etc. If a bearish break of structure were to happen here, what you'd look for is a strong displacing candle down. Probably a closure below this low right here. So a closure at least down here, minimum.
Yep.
And then the next day, maybe a little bit of a retracement. Something to, doesn't have to be the next day, but the next couple days, or hours, I meant, fail to take this high. So something like right here, and then come back down. It's just that simple. And taking out this low. And then for it to hold and for you to not know it's just taking more liquidity, you need to look at after it takes this low, because this is now our external range low, because it's very, very important. This whole fair value gap is also a range, so, or this right here, this fair value gap. Either of these, you want to see if there's some sort of reversal that looks like it might play out, because it might form some highs like this, take this out, and then a bullish break of structure again could happen. Take out this high. Take out this high. Take out this high. And then you're bullish again. So the best way to keep it simple is kind of like I told you, marking out your ranges. But the best way, in my humble opinion, to keep it very, very simple, look at recent price action. After you discover, like, okay, so your daily narrative, right? Like, what does very high time frame look like? It looks like we're going bullish. It looks like there's a... Do you have any questions on why this would be a bearish break of structure?
No, I don't think so.
I wouldn't even say it's a complete bearish break of structure yet. I'd say this is, because we came up, failed to take this high, and then came down. This is a bearish. This is a forming bearish break of structure. For this to be complete, we needed to come down and take this low yet again, and then do this, right? Which it's likely to do. You never know, though. Because if it comes up and takes this, and then comes back, creates a high, you get what I'm saying? That'd be a bullish break of structure. So this is a incomplete bearish break of structure. If it does trade back up and create a bullish break of structure, then this whole leg right here is manipulation. And that's just the reversal, and that's just the way it works, because price is going to reverse at some point. So that's your daily narrative. That's how you identified your daily narrative. Right here on the hourly, this fair value gap right here. Okay? That's one of your ranges. Your external range liquidity is here and here. These two. This one and this one. This is also your other external, and this is also your other external right here. So these are probably daily highs and lows right here, and this is your hourly highs and lows. This is your these are all external range liquidity, because it's just such a high time frame. Because you're not going to be trading on the hourly, you're going to be trading on the 1 minute or 5 minute. You know, so you look something like this. Hourly liquidity, in my mind, in my book, from my own experience, the 1 hour and 4 hour liquidity is so good to pay attention to. So identify what price would look like if we are bullish or bearish. I like to think of both. If we're bullish, we take this, we trade back down a little bit, and then come back up. If we're bearish, basically if we're bullish, we take this high, this internal high. If we're bearish, we take this internal low, and we don't manipulate afterwards. But it doesn't matter because hourly, I really just use for draw and liquidity. We're kind of in between these two right now. If price was right here, right now, like really close to this high, then my obvious draw and liquidity is right here, right? And then maybe even external. But sometimes, like I said, it takes internal and then we'll take external in a form of manipulation. That's what you got to watch out for. So I think what you're getting confused at for break of structure, sounds like, is the difference between manipulation and an actual obvious break of structure. And like I said, identify the current market structure. Identify your internal and external ranges. Identify higher highs and higher lows. This is what a form of manipulation, because it came down, but then it rejected immediately. You see that? In the form of turtle soup.
Yeah.
Do you have any questions about how that could be a turtle soup and manipulation?
To be honest, I think like I kind of get it now, but if I went to look myself, I don't think I'd get it. You know what I mean?
Okay, yeah. Well, we can. If you still have time, we can test you in a minute.
Yeah, I could have another 5 minutes or so.
You have another 5 minutes?
Yeah, probably about that. Yeah.
Okay, so let's go to something like now dropping down to break of structure on this, right? So you have your ranges mapped out, something like this. Internal, right? This is your internal range liquidity. Just for highs and lows to keep it simple.
Yep.
This is break of structure right here because it came up and closed above, came back down, higher low, came back up right back into that range, and either took it out or got close to it and then didn't react strongly afterwards. If it reacts strongly afterwards, it's manipulation. You know it's manipulation because price moves. You'll see it, like the candle, like jittering. It moves stupid fast. That's how you know it's manipulation, because price is trying to figure out who's in control, buyers or sellers. Buyers are currently in control on the 1 hour and on the 5 minute because we're failing to take lows and we're pushing past highs, right? So price is likely, you could say, since we're so close to this internal range high, price is likely to come up. But to have so that wouldn't even be break of structure. That would just be continuation. But a bearish break of structure, right? Where do you think that would be? Like if you were to tell yourself, you need to think, right? Yeah. What lows do you think are high probability lows that would be, instead of manipulation, actually an obvious break of structure? Which lows? Just tell me like left or right, and I'll pick which ones.
Wait, go left. I'd say that. Oh wait.
Which one?
I'm gonna say around there.
Right here.
Yeah.
Yeah, I think I agree with you. I think that could be a higher time frame. That's kind of like on the hourly. That's the hourly low, right?
Right.
But what you usually want to look for before a break of structure is what price took, because price doesn't just reverse for no reason. Price always reverses because it took some sort of liquidity and it then wants to reverse. It can take liquidity and keep going up, but you want to look at your closest liquidity now on the 5 minute. This is 5 minute break of structure. So this is your 5 minute high. You'd want price for a reversal, right? You'd want price to take this, maybe even take this, maybe. Right. Then you'd be, if you want you'd want to keep your eye peeled, because you'd be like, okay, cool, that's an obvious bearish move or a bullish move. But in order for it to turn bearish, it has to like literally transform to a point where it comes down, maybe takes these little like light internal range lows. I wouldn't even say that's a bearish break of structure. Let's even say it closes below. And if we come back up, we're then in a predicament, kind of like I showed you on the daily, where we failed to take a high. We took out some internal, right? You'd want this is your bearish break of structure forming. It's not there yet, but it's forming, right? So you don't want to marry a bias. You don't want to think to yourself like bullish or bearish and then just only stick with that. You wanna kind of keep it. You want like some sort of like high time frame bias and shit, but like on these lower time frames, no telling what price is going to do at these macro times that I taught you, right? But for a bearish break of structure to be complete, it would then need to take out this low right here and close below it, come back up, fail to take this high, and then it keeps going. The bearish break of structure would be right here complete. So this is the initial. This is where you have to identify if it's manipulation or not. In order to tell if it's manipulation, this high will fail to get taken, and then maybe a long wick or a weak closure, right? This high will fail to get taken. Then what you can do is, see, you could target this draw on liquidity right here, or if, let's say, price comes right here, it took out these lows right here, right?
Yep.
Price comes here, trades down, and then forms a higher low, like this, comes up, skyrockets above this. This would take the external, on the 5 minute, the external range. You know what I mean? And that would take probably something like this out. So it wouldn't be a break of structure, it would have been manipulation. That's how you identify manipulation versus break of structure. Manipulation, okay? A break of structure would be something more along the lines of this. Taking these lows, coming back up, maybe failing to take this high right here. Strong closure below, something like right here. Strong closure. You want strong closure. You don't necessarily want like just a little something here. You don't want the wick to be down here. You want like the candle to close and the wick to maybe come down here. Come back up. Something like this. That's a bearish break of structure. Break of structure only applies to the opposite of whatever the current trend is. Keep that in mind, okay, Charlie? So, so I know that's might be a little confusing, and I can spend more time explaining to you if you'd like, but do you have any questions? Because I want to know what you think.
I think I get it.
Because remember, you have to correlate, because you can't just like, I can't just point to any spot on a chart and say, what is price doing? I would actually, like an experienced trader would look at the daily, he'd look at the 4 hour, the 1 hour, the 50 minute, the 5 minute. He'd start looking and analyzing what his internal and external ranges are. If you can identify your ranges, then you know the rule of trading is that price seeks to aim out liquidity, either internal to external or external back into internal. It trades into, that's the only way it ever trades. It's literally not possible for it not to do that. If this was external at the time, and this is all internal right here, it's called engineered liquidity. It's taking this internal and look, it looks like it's a bearish break of structure, but it manipulates here, lower high again, but then a higher low, so you don't really know. Come up, okay, I don't know, higher low, okay, wait, I'm anticipating right here, a bullish break of structure, boom, right here. Strong displacement, do you see that, Charlie? Strong displacement, strong candles. We're not looking for little, like, stepping stones here, dude. This is what I'm talking about. We come up, these are strong candles, strong closure above all of this, okay? It got really close to taking this out, and you can't always expect it to take it out perfectly, but it usually gets pretty damn close. Because what it did here, the liquidity that it took here, wasn't necessarily the buy side liquidity, which was this high right here, because it got really close to it. What it did is this order block. You remember order blocks? How I kind of told you about those a little? It traded up. This is the liquidity it took out.
Yeah.
But then what it did, it didn't really reject off of it strongly. It came up, took it out, failed to take this low again. Buyers are still in control. So there was no break of structure. Most traders, this is the low that most people are going to think is the break of structure. The problem is a lot of people don't know what manipulation looks like in the market because it's kind of confusing. But this whole leg right here is all manipulation because it looks like it's creating a lower low and a lower high, right? But then what does it do again? This right here, price, think of manipulation, price, like I said earlier, price is just indecisive. It doesn't know what it wants to do yet. It took out some liquidity right here. It took out some liquidity right here in these internal ranges. And now it's just going to kind of trade in the internal range. It just fucks around in the internal range. It consolidates for a little bit. But then right after consolidation, almost every time before there's another big move up or another big move down, every time, almost, it manipulates. I could pick you any fucking high right now. Let me find you one like this. I can show you something real quick. And then we'll wrap up.
Okay.
I could show you any high. This is a great high. I kind of briefly went over this in one of my YouTube videos. But this is all internal right here. External, internal. Price came up and took out some internal range liquidity, as well as there's an order block right here, and an order block right here, and an order block right here. Okay, I'm sure all of this ties into like one order block on the daily. But we came up and we took that out, then tanked. Manipulation happens. My point is patience is key. You seem like a very patient guy, Charlie. So as long as you don't have FOMO, like which is fear of missing out, you'll be fine.
Yeah.
Just worry about something like this. This is, in my mind, this is an obvious bullish breakup structure forming, because what did we do? We took out some highs right here. And then not to mention, not only did we take out internal highs, but we also have an external draw on liquidity. This right now is more valuable than this in my book. Than this, as far as external range goes. Identify which external range price looks like it's seeking. Some people might think it's consolidating, but you just got to scale down and zoom in. You zoom in. We took out internal, but we didn't do this, Charlie. We didn't do, like I was telling you a second ago, that huge, the one I just showed you. I don't know where it is. The one I just showed you, this one right here. We didn't tank immediately after. This is turtle soup because it tanked immediately after. That's manipulation. This, it's filling the fair value gap and accumulating orders here, 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 and here. Because everyone right now who's bullish, the market is giving little tells to say, okay, go long here, go long here, go long here, go long here. They're going to keep adding onto their position every hour. They're going to keep doing that every couple hours. And then they know they're safe because price is also not only higher highs, but higher lows. They both have to happen, Charlie. If you have higher highs and lower lows or lower highs and higher lows, it's consolidation or manipulation every time. Okay?
Right.
Or at least wait for it to be obvious, Charlie. My point is you shouldn't be taking trades unless you know your draw on liquidity, your internal and external ranges, and your narrative. This is your narrative. This is your external range liquidity, these and these. This is your draw on liquidity if you're bearish, or bullish, I meant. So all you'd want to see is, yet again, this. But, like I said earlier, if you want price to take out this external range liquidity, what is it going to do, Charlie? Before a big move, what did I say happens before a big move?
Did you say... Wait, before a big move, did you say?
Yeah, right before a big move, what usually happens? This right here. What is this?
Not gonna lie, I forgot.
You're good. It's manipulation, Charlie. It doesn't always happen. It didn't really happen too much right here. It actually was pretty obvious. Actually, no, this would be the manipulation right here. But it's more insignificant. But this is manipulation, remember, because manipulation, it looks like it's forming a breakup structure, but then it displaces immediately afterwards in the form of turtle soup. And then it's complete because it came down and did not close up below that. It closed right here. Or it formed a low right here, came up, took this. Right here and right here tells you that this leg is complete and that it's trying to tell you something. But it manipulates, Charlie. That's what I'm trying to say. It manipulates. So if you were to see price take out external right here, you probably wouldn't just see this the whole way. It'd be too easy. Everyone would be able to catch on. What you'd probably see, Charlie, because you don't really see that a lot. You already have it pretty obvious here. So what you'd probably see is something like this. Does that make sense? We're taking out more internal range liquidity, and we're to take out this external. Internal to external. This is an internal to external play. That's if we're bullish. If we're bearish, you'd see something like this. Fuck. Okay? This external range, it took that out. It took out this external as well. Sometimes it's external to external. But it probably wouldn't look that drastic. It probably, because that's huge. It's a huge move. It'd be something like this. Boom. You'd have like higher highs, higher lows being created, just normal, and then it just, one of them would just skyrocket, like really hard. Then it would come down and look at something like this. Breakup structure. You'd want to get in short either here or here. You don't have to get in short right here. It's not always possible to do that. The market doesn't always tell you to do that. If you're getting in short right there every single trade, I worry for you that you're not trading proper rules. You're just entering a shit ton. And I'm curious, I challenge a lot of people who do shit like that. How many trades a day are you taking? Because the biggest rule I like to teach is either risk a set amount. So I risk on the 50K. Combines, I like to risk 500. And on my funded, I like to risk 100 or 200 tops. Like, that's all I do. And I usually keep it to 1, 2, or 3 trades. Like, but really prefer to keep it 1 or 2 trades and be done.
Yeah, right.
Because just because you can game more doesn't mean you can't lose more. That's the problem. They have a gambling mindset. So
Yeah.
price will always form order blocks, little order blocks, or something whenever it's creating these entry points, right? Right here, this is an order block. Because remember the move down before the move up, like I told you, Charlie? Tap into the order block.
Yep.
Failing to come back into the order block is one thing. What you might see before it comes back up is price come in. Like, I'm not kidding. Sometimes, Charlie, this shit happens. Like, if you're watching the market live, you'll see price action. Sometimes it happens, and it does this in, like, the matter of a second or two. And you have no way of being quick enough to enter. But it literally goes like this.
Yeah.
Like, literally, instantly. It just, like a Nike fucking check mark, bro. It literally just, it comes back, taps into this, manipulates all this internal range because it has to take something up before it takes external, which is internal, right? It takes out all this internal range liquidity. It might even take this low out here, but what matters more is that you see price come here and strongly reject off of it, called manipulation. It's not just going to go straight up like this. It could, but usually it doesn't. If it goes straight up, I'd think something more bearish because it's a form of manipulation probably. Manipulation doesn't always happen before a big move is my point, Charlie. So key takeaways that I want you to write down is your internal and external ranges are important. Your narrative is important. And then to look at what the market is obviously telling you, like on the 1 hour. Just practice the 1 hour or the 15-minute, Charlie, but try the 1 hour. Look at what price is obviously telling you, because it's a great example of what you could do in the next coming week, right? Mark out your internal and external ranges like I taught you, and then look at what price is obviously telling you. Something like this. It's very obviously telling you what it's doing, right? And then another thing is that price usually manipulates before it makes a huge move because it's filling a bunch of orders. I promise you right now, huge fucking whales in the market probably aren't even entering off this shit. They're waiting for a huge move to happen to maybe take this out or take this out or take all of this out.
Yeah.
So remember, like I said yesterday, if you don't already have this written down, definitely write it down. But internal to external or external to internal. That's usually what price does. It's not just going to come up and take this out. If it does, I'd be curious if it would trade back into internal and then take out internal liquidity. Like, I could give you every example here of what price could do and what it's likely to do because I already know how the market tends to move because I've been trading in Q for so fucking long. So, comes up, does this, bearish break of structure, and then forming, that's forming bearish break of structure, confirming, and then final confirmation, bearish break of structure. Manipulation would be this, bearish break of structure. Oh, nope, we're just going to that's scary. It'd be something like this. This would be all manipulation because it took out internal.
Right.
So, another thing to write down, the key identity between break of structure and manipulation is how price reacts. You need to look at how live price action reacts. That's why I always kind of tell people that backtesting is good, but it's not always the best thing to sit there and do for 5 hours. Because even if you put it on the 10-second candles, or 10-second increments, it doesn't behave like natural price action usually does. Not to mention you're like entering so many, you don't have so much time to think about it. Just look at what the market's telling you, bro. Market came up right here, and instead of taking this buy-side liquidity, it took this buy-side fair value gap liquidity and a volume imbalance right here. It took that out and came down. You just need to identify, look in the market, static test like me and Evan teach. Look at highs and lows. Like, I challenge you to just literally look in your trading view and see why price is moving the way it's moving. And before it comes down, like, for instance, this bearish trend here, right? You want to identify why price traded up to where it did, what liquidity it took out before it came and took more external. Because this was external, and this is external. What internal liquidity did it take out? This order block right here.
Right.
And it's strongly rejected. This is manipulation because it's strongly rejected in the form of a retracement. Okay? You following?
Pardon?
Are you following? You understand?
Yeah. I need to go in literally like 1 minute if that's alright.
No, you can go right now. I just if you have any other questions, feel free to ask me. But
Yeah.
I hope you might have learned something. If not, I'm completely fine with continuing to go over this so you get it. But just look in the market, and like I said, look in the market whenever you have free time, and take like pictures if you want and to show me, and then maybe tell me why price looks like it might have, like right here, why did it, like just try to identify the difference between breakup structure and manipulation. It's very hard to explain manipulation, but manipulation has strong reactions after it takes out some sort of low, internal or external. Okay? Either retracements or reversals. All right, I'll let you go, Charlie.
All right, thank you.
Yes, sir. Have a good rest of your day, brother.